Yo guys, this is a video that I've structured that once you see the patterns here, you can no longer unsee it. So this video is going to be a little bit lengthy, but I've structured it in the way that you're going to understand everything about smart money concept in a whole. You're going to be able to understand how to effectively read and understand the market from every perspective. So what I do when I want to analyze the market is that I come to the charts, and the first thing I want to pay attention to is the structure of the market. And I don't just pay attention to the structure of the market. I pay attention to the structure of the market on the higher time frame. So structure, yeah, structure on the higher time frame, and the higher time frame would be 1 day for me. So I want to understand first what the daily structure is doing. And to understand structure here, when we say structure on any time frame, because the market is fractal, when we say understanding structure is the direction of the structure at that particular point in time. So if we have a market that is giving us this kind of structure, creating highs and lows, high highs and higher lows, and it's giving us this form of structure, what it's telling us is that it's creating a uptrending market. So this is a clear definition of a uptrending market, because you can see that we keep breaking the previous high and we keep creating new highs. So this is an uptrending market. So we want to understand this and want to understand a downtrending market. A downtrending market is when the market is creating series of lows, highs, lows, and highs, and it keep breaking this previous low to create a new low, then it reverse again and creates a new low. So when we see this kind of market that keeps creating all of these lows here, we understand this kind of market to be a downtrending market. So on any time frame here, this is how to understand the market. This is how to understand the flow of the market at that particular point in time. Where is the market flowing to an uptrend or to a downtrend? This is just the basic definition of structure. This is just how to understand a structural flow of the market. There's one thing the market could probably be doing again, and which is just the market being consolidating. So if the market is consolidating or ranging in a particular point, this kind of market is not giving us an initial structure of exactly where it's going to. We call this kind of market a ranging market. But for this video and for this tutorial here, I want you to pay attention to structural market. So whenever you come to the chart and you see a ranging market, if possible, you want to avoid trading a ranging market. You want to be able to come to the chart, and your focus is to understand or have a clear structure of where the market is heading to. The better the structure of the market, the higher you could understand what you want to look out for in the market. So when you come to the 1 day time frame, you want to understand where the structure is heading to. Is the structure heading upwards or is the structure heading downwards? Now, if the structure is heading upwards, let me give you an instance. Let's say we have an uptrending market on the daily time frame, creating series of highs, lows, and highs. This is what you should understand here. Whenever we have a new highs in the market, where the market take out this previous high and it give us a new high in the market, this zone here is our breaker point, our breaker block level, where the market broke out from. So we'll call this a breaker block here. The last block here, I'll show you how to mark it out. It's a breaker block level. Now, whenever we have an expansion in the market like this that take out this high here, the market is expected to retrace to a point of interest. So the market is expected to retrace to a particular point and react from there and continue going back up like this. So when we have a new structure like this, we'll now understand that, okay, this previous high now is now taken out. So what do we expect from the market? We expect the market to retrace. We expect from a particular point, or it should react from a particular point of interest and it should bounce back up again. And we just consider this to be an uptrending market. So one point of interest that we mostly pay attention to in the market is this breaker block. And this is the point where the market mostly reacts to on the daily time frame. So if you check the chart, in most cases on the daily time frame, the market do react from the breaker block level. And it sees for downtrending market as well. So if a market is coming, giving you series of lows and highs, and we have the market create a new low like this. Now, this is the zone where the market, this is the previous low before the market created a new low. So this is also a breaker point, yeah? And when we have these kind of breakers here, we expect the market to reverse. Whenever we have an expansion, we expect the market to retrace all the way to a point of interest and bounce back from there to give us another low. Whenever we have that new low, we'll now understand our breaker block point at this point, and we'll expect the market to retrace all the way back to that zone again and react from there to continue going in the initial direction which it was going, or in the initial trend in which it's going. So it's very key for you to pay attention to that breaker block level, yeah, especially when marking out your daily time frame. So we're still going to do all of this on the chart. I'm just giving you a textbook example first, yeah. So back to this illustration. Now, when we have an expansion to the upside this way, we don't just mark out this point and just say, okay, once the market retrace all the way back to this level, we're going to take our trade. Yeah, because this is on the daily time frame. I told you, you want to first understand the structure of the market from the daily time frame. So let me just put this here. Daily. Daily. From the daily time frame. You want to understand what the market is doing from the daily time frame, yeah? So once we have an expansion like this on the daily time frame, yeah, based on is a daily time frame, it's going to take a lot of days. In most cases, it will take a lot of days for it to just series of days for it to get to this level. And it will also take some couple of amount of days for it to retrace back to this level. So you don't just want to wait days without trading. When we have an expansion from this point to this point here, if you go to the lower time frame, this zone over here on the lower time frame, this leg that we have here that created that expansion, so we're going to be working with basically two time frames here, the daily time frame and the 45-minute time frame, or any other lower time frame. So this leg here, if you go to the 45-minute time frame, you are supposed to see a series of highs, lows, and it just keeps going up just like that, creating a uptrend. So this particular leg here on the daily time frame is this structure as a whole, this complete trend as a whole on the 45 minutes time frame. Now, having been able to understand this here, once we have an expansion this way, the retracement that we're going to have from this point, the retracement, I told you after every expansion, we expect a retracement in the market. The retracement that we're going to have from this point all the way to this point here is going to be a retracement that we're going to see the retracements playing out on this time frame as well. So let's say we have the market did something like this. We have that highs, we have that low. Then this is where we have the breaker. Let me make it more explanatory. Let's say we have that high, then we have the low before the next high that occurred in the market. Now this zone now is the breaker block point. So from this point here, the market has to retrace all the way down here and react from this place before going back up. On the lower time frame, this retracement, we're going to see it forming. We're going to see it forming just like this. It's going to create another trend to come all the way to this zone. It's going to create another trend to come all the way to this zone. Meaning after that expansion here, this leg on the daily that would come here on the lower time frame is going to create a new leg all the way to this zone that would come and react from here. Our job as traders now is to mark out this point of interest, and once price get to this point, we're going to watch out for a change in a market structure. So if we say a change in market structure, this is when we now look for our entry criteria, which I'm still going to be talking about. Then we'll flow with the market again to just flow and continue going just like this. So this is just a textbook example here. Let's go to the chart and let me show you exactly what I'm talking about here. So I told you the first thing you want to do is go to the daily time frame. Let me take all of this out. So the first thing you want to do is go to the daily time frame. Now this is BTC on the daily time frame here, and I'm going to be using a lot of illustration for this. So if you see BTC price action on the daily time frame, you will see that from this point, we had the market create these highs. We had this market create this retracement all the way here. And you can see that this retracement from this high to this low, it takes a while, days if possible. Because this happened on the this high here was on the 17th or 16th. And if you can see, the low here, it even took about months, because this was on March, and you can see this low here was August. So it took weeks for that retracement to come all the way to this point. And after we had that retracement to this point, then we had an expansion again all the way to this level. From this level, we now had a retracement again all the way to this level. Then as you can see, we had an expansion, we had this retracement, we had this expansion. So if you see what happened on BTC around this place, you can see where the market is reacting from, even from 2024. So you can see that the market reacted from this POI level here, which is the point of interest of the breaker I told you about. You can see the market reacted from this breaker block here. Now there's something I told you about us waiting for confirmation when we get to breaker. Now if we go to the lower time frame, you will see that all of this retracement here is a completely different trend on the lower time frame. And once the price come to this breaker, this is when on the lower time frame we are going to see a change in market structure. Then we are going to look for our entry on the lower time frame at this point to flow with the market again to go all the way to this high. Now once we take out this high, you can just see how the market played out all those whiles. So let me come to this zone here. We had this level, this low, we had this high, we had this low, we had this high. Then the market started to change structure. You can see then this low got invalidated from this point. Then we have this low again. You can see how the market is now just changing structure little by little. Now this is the last major low that we have here, and you can see that the market just broke it down. Now immediately the market broke down that low on the daily time frame. You can see that this is now a key level in which we have here, and the markets were expected from that level. So after the market broke down, you see that the market came all the way to this level, respect from it. Now as traders, once the market gets to this point, this is when we will now look for our entry criteria to reverse the market all the way down again. So you can see now after this point, the market created this leg down. Now after I created this leg down, where is our recent point of interest, this place, this zone here. And if you notice, the price now from this point, the price retrace all the way to tap into our key level at this point. So I told you as trader, you don't just set your limit order here. You wait for the price to get to that point, then you look for reversal concepts. Now back to, let me give you a textbook example so that we'll talk about how to look for that reversal concept we're looking for in these key levels here. Let me take out all of these ones. So you can see how I mark out the trend on the daily time frame. This is how you also want to mark out your peers on the daily time frame so that you understand what exactly the market is doing on the higher time frame, so you'll be able to flow with the market overall. So once you understand this, you understand where you are looking for your reversal concept. Let me go back. Now back to our textbook example before we go back to the main chart here. So I told you now, let me use a bearish example. So let's say this is on the daily time frame. When we have this low, we have this high, we have this low. At this point, we understand that we're looking out for reaction at this point on the lower time frame. So once price now reverse all the way to this key level here, and the market start reacting from here, then we'll go to the lower time frame. At the lower time frame is where we are looking for our entry now. Now on the lower time frame, let me mark out this to indicate. Now remember that this what we look out for on the higher time frame, that is the 1 day, and what we are looking out for on the lower time frame, which I say I mostly can use the 45 minutes or any other time frame though. This expansion on the 45 minutes, this particular expansion from here would give us something like this: lows, highs, lows, highs, lows, lows, and highs. That is this particular expansion from this point to this point on the daily time frame would give us something like this, which is from this point all the way to this point. So let's say we have the market initially coming down and gave us this low and gave us this high before it gave us this low. So at this point now, we now know that this zone here is the point of interest we are looking out for in the market. So now, having to understand our zone here, we are now going to wait for the market to now reverse all the way to that point of interest. So let's say the market now on the 45 minutes, we are going to see a structure like this, which I'm still going to show you on the chart. The market now reverse all the way and tapped our level here. Now, having understand that the market have tapped this our point of interest here, this is when we now start to look for reversal concepts to flow along with the market all the way down. This is when we now start to look for reversal concept to flow all the way down. Now, how do we look for those reversal concepts? We understand those reversal concepts by a change in market structure. How do we understand a change in market structure? If we have a trend that is giving us series of highs, lows, you can see the momentum remains the same. Highs and lows, highs and lows. Now, if we see a change in market structure, a change in market character, this is when it's identifying or it's telling us that, okay, this market now is going from a bearish look to from a bullish look to an bearish outlook. Now, having the fact that this market is reacting from a POI on the higher time frame. Now, mind you, you want to look out for this reversal concept on a POI on the higher time frame. It has to be on the POI on the higher time frame. Once it reacts from the POI on the higher time frame and it's changed structure, this is when you'll be looking forward to trading this kind of reversals. A change in market structure, then you'll be looking forward to taking your order block. Maybe taking the trade from the order block after you have a form of inducement. You are looking forward to take the trade from an order block level, yeah? You'll be looking for to take the trade from an order block level and keep selling the market all the way down. Keep selling the market all the way down. This is the only zone where you look for reversal concept. This is the only point where you look for reversal concept. Any other thing you are looking for, once you identify that reversal concept from that point and the market start dropping, now you are just going to be trading continuation concept, all the way till that low gets taken out again to complete the initial structure of that trend. So let's just go to the charts. Let's do the chart work there so that you understand it more clearly on the chart. Now, so having to be that we're here, I told you that once we have this expansion and the market tap into our point of interest, this is when we now go and look for reversal concepts. So let me mark out that point so that we'll go and look for reversal concepts on that level on the lower time frame. So this is our, no, let me mark it out from this one. This is our point of interest here. So let me give it this color so that I can understand that zone. Now let's go to the 45 minutes. Now you can see the point of interest there on the higher time frame. I even took some trade also from that point. So if you see the reversal that happened there before the price tapped into our, I took many trades and I posted it on Telegram. Yeah. The link to the Telegram will be in the description box. So as you can see here, the market was giving us a uptrending flow. It was giving us an uptrending flow, and this is the reversal. This is just the basic reversal. You can still trade all of this reversal, yeah, and we're having this flow to the upside. We're having this flow to the upside. So I was still flowing with the market, understanding what the market was doing. I was still flowing with the market, yeah. Immediately the market tapped into our point of interest on the daily time frame. I knew that this is when I might start selling. So immediately the market tapped into it. You can see this was the last low we had here. So the market has tapped into our point of interest now, and it reacted from there, changing structure. So as you can see here, the market started to change structure from this point. You see that? You see that we now have a change of structure. Took out liquidity. We're still going to talk about liquidity, and it just starts selling all the way down. And it just starts still selling all the way down. Now, it reacted from the point of interest on the higher time frame, and is going to take out the low. So let's go to that daily time frame. Let's look at where the market is going to take out. Oh, my network, damn. What's wrong with MTN? They shouldn't be wasting my time this much, bro. So on the daily time frame here, you can see we're expecting the market to retrace and come back and take out this low, which is that was what the market even initially did. As you can see, that was what the market did, and the market just continues selling from there. But you see that on the, okay, this is the 4 hours, the daily time frame. We expect it to reverse, start from the point of interest on the higher time frame, look for that reversal concept there, then flow with the market and expect it to take out this level to continue the structure of the flow of the market. So you see how you just use your lower time frame and your higher time frame to navigate and understand exactly what the market is actually doing here. So let's go back to understanding the flow, yeah. So the market already take out this key level, but I still think we're bearish. So we had the low, the high, and this is just whatever you're trading here is just basically continuation. The market took out this level, created a low. So this low now is a reaction from this point in which we have here. Let's go to the daily time frame. If you take a look at this zone here, we have after the market failed to react from there, we have this point here. So that is also a low, and it's like a point of interest that failed. So when the market was going up, it created this low. Well, this is our overall low, but this is an internal low. So when the market reacts from there, it just went back and bounced. But since this is still a valid low and a point of interest, market would reverse from that zone as well. And that was the reason why I was looking for sell at this point. Now, since it's on the daily time frame, you don't just take your trade from there. Once the price reverse back to that level, then you go to your 45 minutes again and you look for sell criteria. So if I'm to look for sell criteria now in that zone or that level, you can see I called out most of these trades on the group as well. Oh, I think I cancelled that other block indicator. Okay, this is the level we have here. So let's go to the 45 minute now and see our reversal concepts from there. So if you pay attention now, you can see that once immediately we tap that zone on the 45 minutes, what do you notice here? The market was buying, was creating series of highs and lows, creating series of highs and lows. Then it tap into that 45-minute time frame, and when it tap into that 45-minute time frame, you can see that we have a switch in market structure. At this point here, you can see that the market created this low, created a high, created a low, created this low. Now taking out this major low that we now have here again. And this is just telling us that okay, our structure now is bearish. So from this point, having understanding that the market reacted from a point of interest on the higher time frame, I'm now interested to flow with this market all the way down, all the way to this point. Let's look at the point I'm interested to flow with the market to on the daily time frame. Yeah, I'm now interested now to flow with the market from this point all the way now to take out this point for the market to just continue going down. So you can see that I've understand where exactly the market is literally going to. So I don't have to, since I just understand where the market is going to here, I just have to position myself and flow with it without having to drag or panic. So on the 45 minute now, this is where I will go and just understand what the market is doing all the way from there. So as you can see now, the market came after I take out that major low. After I take out that major low, it took out liquidity and it just continued selling. Then we had this switch in market structure here and it continued selling, created a liquidity for us here again, and it bounced. So as long as the market hasn't take out that low, the low that I'm expecting the market to take out there, whatever I'm going to be looking for till that low gets take out is sell. So we have an order block around this zone here. I called out this trade on Telegram. Or is it for or is it on X? I called out this trade as well. So from this point now, the market took out this one now as liquidity, and it continued flowing down all the way down. So as the market keep flowing down now, I'm just going to be positioning myself and flowing with the market until we take out the major low that we have here. I'm going to be positioning myself and looking for every point of interest that is valid in the market, and I'm going to be entering at those points of interest to continue just riding with the market all the way down. This video is already 30 minutes long, all the way down. So that is just how to understand and flow with the market in a very simple manner. Now, this video is already 30 minutes long, and so I'm going to be talking about liquidity on the next video. So that would be it for this video. Just try to understand the flow of the market this way, and it just get better. Yeah. On the next video, I'm going to talk about liquidity. So if this is kind of content you want to see here, do ensure to subscribe to the channel, and see you on the next video. Bye.